But Magnus, thank you so much for joining us. We are honored that you are with us on this first inaugurational episode of SweBAN Talks.
Thanks a lot, Naimul, and thanks for having us. And it's also, I would like to start with um, mentioning our big thanks and gratitude for you to setting up and initiating SweBAN. And as you know, we are STOAF is also a member of EBAN and also a member of Connect. So there's a lot of different organizations. We really strongly believe in networking and building partnerships between all different investors here. Uh,
Amazing.
a little bit about my background. I'm originally a nuclear physicist by training. I spent my first 10, 12 years of my career as a reactor physicist in nuclear engineering. I then had a long career in international works, different parts. I worked with international business development. I have done work in Zimbabwe, Japan, Vietnam, UK, US, etc. I also studied in the UK for a while. I was a pioneer in smart homes and virtual reality in the end of 1990s. And you may think that virtual reality and smart homes, 30 years ago, that was early. And that also learned me a very good lesson that timing is extremely important when you start with new technologies. And I think we missed the time window in smart homes with some 25 years. So things that we had up and running at that point in time, end of 1990s, is starting to happen on the market now. We had 45 houses up and running in Walnut Creek, 1 hour east of San Francisco. Everything worked technically everything worked perfect, but the market timing was a miss of 25 years. So that was a good lesson. I was then sent by the Swedish government as a technical attaché to San Francisco, Silicon Valley in the end of the 1990s. And that's also where I co-founded Silicon Vikings, also a big networking organization that now has grown to 45,000 members across Nordics and the US. I then done some startups. I was president of a technology engineering firm. I was in the consulting business. I co-founded 2 companies that we exited. And then I was 19 years with the American research and advisory firm Gartner. I had several different roles, including I was head of EMEA as a group vice president. I was also chairman of the board of directors of the Scandinavian companies. And then at the when I left there after 19 years, I bumped into a couple of people who were about starting STOAF's third fund, STOAF 3 SciTech. And then I ended up as a general partner, finally, of that fund. So that's a little bit of my background. But I also do a lot of sports. So if anyone there of you would like to join me on a triathlon or a marathon or a cross-country ski race or something else, I would be happy to see you out there. So that's a little bit of my background.
Amazing. Very interesting. Lots of common things here. So I would maybe like to stay here for a couple of minutes and talk about your interest and involvement in smart homes and virtual reality that way back in time. And I think virtual reality, what's your take on virtual reality as of now? Like, is it still the time or are we still slightly off time?
I think there are a lot of different applications of virtual reality. Some of them are
Hmm.
already out on the market and will definitely have a good market potential. I
Hmm.
think nowadays we often talk about XR instead of VR because
Yeah.
it's a mix of virtual reality, augmented reality, etc. And you have several sort of industrial applications that provide great benefit to the great business benefit. Like if you're
Hmm.
an electrician on a Boeing aircraft and you're drawing the cables and things, you could be sort of significantly supported by having AR support instead of the big drawings on paper. But I also believe that there has been a lot of hype in the industry, And a lot of companies that has worked in the area have never sort of taken off. I believe we have had too much belief on science fiction like applications, everybody walking around with XR glasses on the street and those kind of things.
Okay. Okay. Very interesting. I got first interested in VR around 2010s. I actually created a startup in 2014. We got a lot of public support around it, but we couldn't crack the code of like the VR devices at that point of time didn't have mass penetration in the markets, and it was consumer facing technology. So we struggled and eventually closed it down. But great to see that you have 20 years ahead in that already. I think second thing that I wanted, like you talked about, so you kind of summarize a lot of things in 3, 4 minutes, but you talked about physics. You talked about running. You talked about Silicon Vikings community. You talked about investing and STOAF. These are so many diverse things. How do you connect these? Like, what is there a common thread around these?
Yeah, I think there are. I think when it comes to investing, it's a lot about both keeping high speed at the same time as it is an endurance sport. Of course, investment holdings, yeah, you very often have long exit horizons. You need to have patience. You need to have endurance, continuing to supporting your portfolio companies, and it's really hard work. And you need to keep high speed at the same time.
Very interesting, the combination of high speed and endurance. Great. Let's talk a little bit more about today's topic. For example, we like angel powered funds. What is an angel fund, if we could start there?
I would say that an angel fund, the way we define an angel fund, that is different from a normal, traditional VC fund, is that a traditional VC fund has, we talk about limited partners. Limited partners, that are the investor that invest capital into the fund. And a traditional VC fund typically has a few, 3, 4, 5 or so large investors. Could be like big rich family, could be insurance companies, banks, etc., investment companies putting the money into a VC fund. That's the traditional way to do it. An angel fund is fairly similar in the structure. However, the LPs are business angels and private individuals instead of the big institutions.
Okay.
That's the main, and that's how it also could end up with a large number of smaller LPs in an angel fund compared to a traditional VC fund with only a few very rich investors.
Okay. And then how does one go about setting up something like this?
It's actually it's a lot of work. It's actually, I would say it's harder to raise or setting up an angel fund because of the large number of investors in the fund, the large number of LPs that you have to manage. And the way, actually, I have a slide of an organization, of an org chart, how we have set this up. To see if here I can share this one.
Okay, that'll be nice to look at.
Can you see my screen now?
Yes.
So this is kind of the structure we have. So the LPs we have in the fund, we have a total of almost 110 investors of the fund, including ourselves, because the general partners managing the fund also typically are investors in the fund. That's more or less internationally that's a requirement. So you need to have stake into the investments yourself as well, personal stake. So we have a large number of individuals, individual business angels. We have some family offices who has invested, and then we also have a couple of business angel networks that are investors of the fund. So, for instance, we have Västerås tech investors. That is a
Uh-huh.
business angel network based in Västerås. They do their own investments as well as they have invested. They've gone together and invested a lump sum from their community into STOAF 3 SciTech. We also have sustainable energy angels. That is
Okay.
exactly what I sound like. There are a group of very senior individuals with an energy background, and they do their own angel investments.
Mhm.
But they have also collected a lump sum that they have invested jointly into
Okay.
STOAF's current fund.
Okay.
Then there's also some kind of, if you're peeling the layer of the onions, you start with the 110 that we have in the cap table of our current fund. But if you then peel the onion going backward, you see that you have, one investment company there has, like 300 or so small investors behind. We have the sustainable energy angels, there are 20 or so. Vesperus Tech Inventors, they are around 9. But one of those 9 is, if you're peeling the next layer of the onion, there is an angel network of some 100 business angels behind it. So if you collect it all together, you will sum up to like 500 or so business angels that are directly or indirectly invested in our current fund.
Very fascinating, I would say. Like the way it's a multi-tier network. Um, does it also, when you said, because you clarified that there's a traditional way of setting up a fund, which is a venture fund, where limited partners are traditional banks, pension funds, insurance companies, and others, and then angel fund is different because these are private individuals or investors. Does it mean that by design, large LPs cannot join, or are they still welcome to join in an angel fund? Is it still possible for the fund to be a combination of both worlds?
We are a little bit of a combination, but it's a little bit of a mix, because we have in the design of the fund, in the so in the conditions for the fund, we have the minimum ticket size is 1 million Swedish krona, but we also have capped the maximum ticket size to 10 million Swedish krona.
Okay.
So we have, lots of lot of the LPs have invested, the 10 million ticket size, but we didn't want anybody to be too dominating. So we didn't want to take in anybody who is 50 or 100 million.
Okay. Okay. And how does it work when compared to, let's say, so there's an angel fund and there's a VC fund. VC funds have very clear thesis. So one part of that is they have a very clear thesis. They have GPs and other layers-based management structure. They have management fees. Is it the same over the angel funds, or is it different?
Yeah, for this no, for this angel fund, it's
Hmm.
very, very similar.
Okay.
We have a very, very standard setup. The fund is managed by us 4 general partners,
Okay.
just like in a normal VC fund.
Okay.
The
Okay.
difference is that and of course there also is a small management fee to cover
Mhm.
expenses and those kind of things. I think the big difference is that GPs in a normal fund, they have sort of big salaries. They have a lot of admin staff. But the 4 of us, we do in principle everything ourselves. We have some limited admin support, but very, very sort of low cost, and therefore also we're able to have a lower fees in the fund.
Okay. And in terms of positioning or stage, would you come before a traditional early stage VC? Because you
We
are angel powered, or would you still
yeah.
be in parity in time in terms of, so let's say let's wear the hat of a startup. For a
Mhm.
startup to go to a traditional VC fund versus two off, is it the same stage, same
I think that you have different type of traditional VC funds. We have some of them that going in later, sort of Series A,
hmm,
Series B, and even going into, do the first investment in Series C.
hmm,
I would say are usually not the first, but maybe the second round investors like pre-seed and seed, and we can also do some Series A, but dominantly pre-seed and seed investment fund. But we also do, we come in, sometimes we get in at the same time as some other sort of well-known Swedish Nordic VC firms. We very often co-invest together with Almi Invest, for instance, who is the most frequent Swedish VC investor. And we have slightly larger ticket sizes. I think we can go a little bit longer than them. We also do invest with several other. We have a good network of co-investors in the Nordic countries.
Okay. And can these co-investors be individual angels still, although you're an angel fund?
Yes, they can. There are some cases individual angels. However, we prefer for the best of the portfolio companies, we usually don't want to have a too long cap table.
Okay.
Because that could be a little bit of an issue when taking in big ticket international VC capital in later rounds.
Yes.
Some of the international VCs are quite often very hesitant to what I call broken cap tables. And one thing, one aspect of a broken cap table is having a too long cap table with many small investors.
Okay.
That's also why we think that one of the advantages that we have is that we gather all those sort of 110 angel networks into one line in the cap table for the portfolio companies, which they love.
Okay. Got it. The angels themselves in the fund, do they only get the right to invest through the fund?
Well, no, we also have something. That's a very good question. That's something that we have that I believe is pretty unique to us. We have what we call LP co-investment rights.
Okay.
That means that for every investment that the fund does, so first of all, then all those angels you have on the slide, they have invested, they have committed capital from 1 million to 10 million Swedish krona each.
Okay.
And then for each investment that we do in a portfolio company, we go out to the LPs and we ask them, dear LP, do you want to invest additional money in this particular portfolio company? And many of them do. So I think we have some like 20% additional capital from LP co-investments. And what we then do in order to save the cap table and still have a nice and clean cap table, we create a special purpose vehicle, like a Swedish kommanditbolag for each of the portfolio company investments that we do. And actually we can see it on this slide.
Okay.
You have the total structure of, so we have the management company, the four of us general partners at the top, still about 3 venture partners.
Okay.
It's the management company of the fund. The fund itself is the blue box in the middle. You have the investors, the limited partners that have invested in the fund, and they are then also shareholders of the fund. And that fund has their own board of directors, with one of the board members is Klaus Gottwald, who is a STOAF co-founder and chairman of the management company. So he is on the board. And then we have 2 board members that are elected from the LPs. And then the board has 1 independent chairman. Independent means he cannot be an investor in the fund. He should be totally independent. And that is Lennart Lybeck, who is actually the founder of Industrifonden back in the days. So he's the independent chairman of the fund, and that is handling governance of things. And then what we then do, we see the bottom layer of this hierarchy is the portfolio companies. And then just take as an example as Align Bio.
Yeah.
a nanowire company based in Lund. We then create a kommanditbolag, a special purpose vehicle, SVP aligned biokommanditbolag, and we put all money through that kommanditbolag into the portfolio company. So both the money coming directly from the fund and the LP co-investment capital, everything goes into that kommanditbolag. So, and then it's a kommanditbolag who is the formal shareholder and investor in the portfolio company, meaning that there is only one row in the cap table.
Okay. Really good. I have a couple of follow-up questions here. And the first of these is like, as opposed to a few LPs versus, in your case, more than 100 and 500 individual angels, somehow at some level of tier connected.
Mm-hmm.
How cumbersome or how management intensive is that?
It is actually much more cumbersome and intensive than I expected when I joined, when we set this up. And I would say the LP co-investment, that's one thing, adding the LP co-investment rights for 110 LPs. That's quite a bit of administration. Setting up the kommanditbolag, sending out LP co-investment offers, collecting all the subscription notes from the LPs, putting them together, writing kommanditbolagsavtal, and then managing the entire sort of database of who has invested in what and when, and so you could handle all the payback at the exits and the and all those kind of things. So that's a lot of work. And then you also have very enjoyable but still time consuming. You have all those investors are extremely friendly and very nice and great people, having great experience, often want to meet and have updates. So Magnus, can we have lunch update and those kind of things? And that's very fun and enjoyable, but it also takes a lot of time.
And all this management falls on to the 4 journal partners base.
Yes, correct. We
GPs
have
based
some
company.
Yeah, that's correct. We have some limited admin support. We have the back office and economy administration. But most of the vast majority of all this work falls on the 4 of us.
Okay. Then the second point, because when we started talking, you mentioned when you were connecting the 4 dots of physics, communities running and investing, we talked about high speed and endurance. Okay. Let's pick high speed. From a startup perspective, because you have an administrative structure which could take some time, does that drags on the fundraising cycle for a startup if they're with you? Like, how is that managed on the startup? Or does it reflect there, or does it have no implication?
No, I think since all decisions are with the GPs or the extended investment committee, that is 5 of us. That is the 4 of us, and then we have additional representative from the investors. So we have a very sort of tight and small, closely related group that take decisions. We can take very, very speedy decisions. Compared to the larger funds that has a lot of hierarchy and bureaucracy. So we work like from that perspective, we really work like a startup. We can be really, really speedy. We can set up a decision meeting at 9, 10 o'clock in the evening if needed, or 7 o'clock in the morning. So like a startup, no office hour, no formal office hours, no administration, no bureaucracy, having a very clear and strong governance, but we can do it very, very quickly compared to the larger funds.
Amazing. I'm just summarizing it for the community here as well, because I think this is a very interesting talk for business angel networks. I'm kind of focusing on 3 things, like angel funds versus a traditional venture fund. In your case, it's a large multi-tiered angel fund with different levels and nodes of angel networks. Number 1, massive advantage here of LP co-investing. So I think that's a very clear
Yeah, yeah.
advantage. And I think you still are the speedy decision making is the main thing, like managing this structure and still being a tightly glued startup format team and managing these decisions fast. Really good. Let's talk about from a startup side. Let's wear the startup hat. So let's say I'm a startup founder and I'm coming to you.
Yeah.
What's the basic thesis? Like what kind of startups you're taking, at what stage, what kind of ticket sizes?
Yes. So we typically do, as I said, we do pre-seed and seed
Hmm.
investments.
Hmm.
We have done if you look at our existing sort of 15 portfolio companies, plus we have done
Hmm.
a couple of new that I haven't in the slide deck. So let's say we have 18 today because we just have invested in a couple of the last couple of weeks. We have done initial ticket sizes of between 1 million Swedish krona to 12 million Swedish krona. However, both the 1 and the 12 are a bit of outliers. I would say
Okay.
that a most typical first investment ticket size is 3 to 5 million SEK as an initial investment. And then we do follow-on investments for companies that continue to develop in a good way, which so far has actually been all of our portfolio companies, because 5 years into the investment period, we still have all of our portfolio companies up and alive and continue to develop, which is really amazing. It is far beyond expectations and far beyond all statistics out on the startup market.
Mm.
But I would also say
Amazing.
that we are extremely selective, and we do an extremely thorough evaluation and due diligence. And with due diligence, I don't mean sort of the legal due diligence. I mean sort of the technology, market, team, innovation, competitive advantages, etc., before we invest. So I think
Okay.
that's the reason, behind the those extreme results so far.
Okay. I'm tempted to go into exploring that more, but I'll kind of go back and talk about why STOAF. Let's go back a little bit in the history because we got a lot into the specifics. We'll again come back to it, but for our community, what's the big idea behind STOAF and how have the funds over the years evolved into one, two, and now three, which is in a fourth or fifth year cycle, maybe?
Yeah, this is a history that goes long back in history. I think started with actually, I think you had fireside chat with Lennart Olsson before,
Mhm.
who is one of the key founders, together with Klaus Gottwald, who is now the chairman of the management company.
Mhm.
And I think it even started back with something called Roslagens affärsänglar, where they
Okay.
had a vision of setting up sort of an angel network. And it all sort of origins from Lennart's research at Stanford University back in the days, where he looked at how does the best performing Silicon Valley VC companies work and operate. And Lennart has written several books about the
Yeah.
topics like best practice venture capital and träffsäkra investeringar and startups, all kind of thick books, and both methodology and how to go about it. So that's how it's all started. And
Hmm.
then it was Klaus and Lennart. Actually, we call Lennart the archangel, sort of the angel of angels in the Swedish sort of angel book of history.
Okay.
And sort of they started then STOAF 1 back in 2008 as a very small angel fund with limited capital. And then after 5 years, they 5 successful years, they started STOAF 2 back in 2013. That was a bit larger,
Hmm.
a couple of
Hmm.
times larger. And then 2019, they started STOAF 3 or STOAF 3 SciTech, where SciTech stands for science and technology. And that is the type of companies that STOAF that the current fund invests in. So, companies with strong IP, patents, deep tech, and life sciences companies. So that is sort of the current focus of that is the focus of the current fund. So the early stage companies based on deep tech and life science research innovations.
And then they go through a very thorough, as you said, technical due diligence process, market due diligence, team due diligence. So I think great. 2008, 13, and 19.
And 19, that was when I came in contact after leaving Gartner after 19 years in this US based research and advisory organization. And also since I had a background living in Silicon Valley back in the 1990s, I lived one block off Sand Hill Road that sort of divides Menlo Park from Stanford University, and Sand Hill Road, that's known as the VC company hub in the US and in California and Silicon Valley. That's where you have all the very well-known venture capital companies that are on Sand Hill Road. And that's how I first got interested in startups. I was following it. I was, having Swedish delegations coming over. I actually think before, the team that then founded Connect Sweden, I had over to Silicon Valley. I think it was 1996 or 97. And I got inspired and then started Connect Sweden. So that's how I first got interested. So when I left Gartner in 2019, I started to do some first angel investment myself, and then I bumped into Klaus and Lennart and Klaus Post, who were about to start STOAF 3 SciTech, and I thought this seems to be a very serious approach, extremely knowledgeable and very, very experienced team. So I decided to invest some of my own money into STOAF, and then I took part of Lennart's training session. Lennart has running a lot of training sessions in the with this book as the sort of as a school book, how to invest successful investments in startups. I went through that sort of first training course and then the second training course, and then I started to work more closely with the team, and then I ended up being one of the 4 general partners of the fund. So that's how I came into it from the beginning.
Exciting. Been a journey. Why the name Stockholm? Is there a significance? Is there do you operate in Stockholm only? Or is there some,
Actually, I usually say that STOAF, we have done like Skanska did. Skanska is now Skanska. Skanska used to be Skånska Cementgjuteriet some 50 years ago. But Skanska is not Skåne any longer, and it's not only cementgjuteri any longer. So when Stockholms Affärsänglar was started by Lennart and Klaus and team, it was Stockholm. And both from the business angels, they were mainly Stockholm based, and also the investments were made in and around Stockholm. I believe that STOAF 1 had an investment principle of investing only in companies that were I don't know if it was maximum 1 or 2 hours away from Stockholm by car.
Okay.
But now STOAF is can invest in all Nordic countries. Okay. The angel investors of STOAF most of them are from Sweden. There is no Stockholm dominance. Most of them are from Sweden, but we also have investors from, I think we have 1 in France, 4, 5 in Belgium, Belgium and Netherlands. We have a handful in Portugal, Switzerland, 3 in the US. So, and that's why we did like Skanska. So we kept the abbreviation, but we usually don't use the long name any longer.
All right. So it's STOAF going forward. Great to have that clarity and that history behind it. So where we branched off into this discussion on the history side, let's come back to we were at the point where we were discussing how companies are thoroughly vetted in the process, and that is one reason why you have a strong portfolio as it's building, and then you are also following on with these companies. Any examples, one or two examples from your portfolio which we could discuss just to get a feel for our community kind of companies that you work with?
Yes, I think we could take. We have a couple of semiconductors, transistors.
Mm,
That's a big thing nowadays, and
mm,
that was very apparent at the COVID. During the pandemic, where the supply chains were broken, we had
yeah,
a lack of transistors and semiconductors for big Swedish industries, as an example, because a lot of things were coming from China, Taiwan, and far away US as well. And so there's been a lot of focus on creating a European and also Swedish uh, industry in the around semiconductors. And one of the companies that we have, I could just make as use as one example, is a
mm,
Linköping-based company called. I could show this slide here, called
yeah, okay.
that is a very specialized semiconductor company, actually doing what we call it's gallium nitride on silicon
Mm,
carbide. It's a very specialized high performance semiconductor material
okay.
for high power and very high voltage applications.
Mm,
And so we invested in companies a couple of years back, are very active on the board, have some very specific roles on the boards as well.
mm,
The company has now also got a very strong investor network. We have American Intertech, we have the Irish big specialized semiconductor fund Atlantic Bridge. We have Navigare Ventures, that is part of the Wallenberg family, VC arm. We have a chairman of the board from Atlantic Bridge based in Palo Alto in the middle of Silicon Valley, who actually happened to be David Lamb, who is the son of David Lamb Sr. He's the founder of Lamb Research, that is a well-known, publicly listed American big semiconductor company.
okay.
So this is one of the companies that we have, and have invested in new machines. Has got a lot of sort of media traction, big articles in Dagens
Okay.
Nyheter, a lot of conference sort of attention. And this is sort of the new facility that we moved to last year to get place for this big new machine, this big reactor for manufacturing the semiconductors. So that is one example of a very exciting company in the space that we have.
Very exciting. And I'm a bit curious as well. If we talk about again, let's go back to STOAF and the type of companies you're investing in, SciTech, you said. Deep tech compared to, let's say, an e-commerce startup
Mm-hmm.
has a very different and a longer incubation period in terms of technology and its approach to market. How do you see that in your investment philosophy? How does that reflect? Are you guys patient? Like, how patient are you in terms of seeing the results
Mm-hmm.
of
Mm-hmm.
so? Because typically there's a lot of discussion that Nordics is great at deep tech, but the funding resources are not enough to kind of support the deep tech innovation coming out of Nordics.
Right. Yes, that's fully correct. You need to have the patience. We have a
Mm,
fund investment. So we have the fund is a 5 + 5 year structure. So 5 years of investments, 5 years followed by a 5 year exit period, and then there is a 1 + 1 year possibility for fund extension that is also very sort of standard in the industry. That means that maximum of 10 to maximum 12 years from first investment until the fund is supposed to be closed down and exited. So that is of course something that you need to take into account when you make the investments. But also looking at some of the companies, for instance, we also do life sciences companies. We have a number of pharma companies, and that also requires a very, very deep expertise. And we have, as one of the 4 general partners, we have Claes Post, who has extremely spent his entire life in the pharma industry, has been head of R&D and pharma development at Astra, at Pharmacia in Italy, etc. And without Claes, we wouldn't even touch a pharma company, because you really need to have the deep competency in that sector in order to invest in it. But one thing that is interesting with the pharma companies, because that is the extreme example of companies that have a very, very long period until they reach the market, because all the clinical trials that you need to go through all the the phase 1 and phase 2 and phase 3 and everything, and the regulatory approval, FDA in the US, etc. But one interesting thing with the pharma companies is that you very often do an exit far long before the medicine or the pharma hits the market. So if you have gone through a successful phase 2 study, there is very often an exit to a big pharma company that will acquire the entire project, and that means that the investment cycle is not as long as you may expect from that kind of company.
Yeah, that's very interesting, which means the ecosystem dynamics of pharma are that early exit possibility makes it possible for the company to be still in a build-up stage while being acquired, and the fund to move on.
Absolutely.
Really interesting point over here. I'm also trying to understand, because you said that you talked about class and hence the deep knowledge of the sector, which is crucial in deep tech, in life sciences and specialized sector. Also want to understand how hands-on is the fund post-investment? Or is it that you have a management position? Like, how do you typically work with a company? What's the value add?
Yes, I would say that we work extremely closely with the companies, and without sort of bragging, I would say that we are in most of the companies that we have a board role in most of the companies, not because we demand it, but because we are elected in, because we are seen by the market as providing a lot of value, and also not only sort of our experience in the respective areas, but also that we are not shy of work. In the same way as it's tough work to run a marathon or do a Vasaloppet or long distance triathlon, but it's also hard work to, if you really want to add value on the board, you can't just go to a board meeting and sit there and saying smart things. There's a lot of work outside of the board meeting room. And we have actually sort of, just take one example. One of our portfolio companies, I was with the team, 3 days in Germany at the big sort of, deep tech investor fair. We have introducing companies to potential customers in relevant businesses. In one company, I wrote a 20-page competitive analysis report for one company that very few other board members are willing to take on the work. We have individual meetings with potential new investors, and sort of to feel, to get a feeling for their appetite, and so we can prepare the portfolio company management before having their meeting with the same investor. So there's a lot of work we do. We do, financing structure. We, are part of the fundraising committee, M&A committees, etc. So you're really hands-on. I also know like Claes has been very hands-on on the scientific side on some of the pharma companies.
Very interesting. So I'm thinking, like, you're on the both sides. So with the board hat, the governance is secured, and of course, as you said, it's more elected. So STOAF is recognized as a thought leader, as an expert, and hence this is a role which is very valued. But then on the other side, on the operative side, you can also roll up your sleeves and
Yes.
just like
Yeah.
me. So,
Yeah. Exactly. Yeah. Yeah.
uh, really great. What kind of technologies? Let's move to future or like span out a little bit and try to see what do you see on the horizon in terms of technologies or industries which will be on your radar or will be interesting in future going forward.
Yes,
Um,
of course. I mentioned that we have quite a number of portfolio companies within the semiconductor space, and in that
okay.
space, we typically don't do standard silicon that is in the logical circuits of our PCs, but then we have a focus on high performing new materials like silicon carbide, like nanowire transistors for high frequencies to manage advanced 5G and 6G networks, satellite communication,
Mhm.
where you need very we're using high frequencies and you need low noise. We do semiconductors like silicon carbide and gallium nitride for high voltages in electric vehicles and also charging stations,
Mhm.
where sort of standard silicon can't withstand the high voltage without getting breakdown. Sort of when you have 800 volts and so you really need to have high performing semiconductor
Mhm.
material. So that is one area within semiconductors. We also, when it comes to pharma, we look at the life-threatening diseases. We have companies like treating diabetes. That is a disease that is really exploding around the world, and also now also entering some of the companies, some of the countries and parts of the world that didn't have it in the past, like Asia and Southeast Asia. Will eventually come to Africa as well when with growing wealth. We also, of course, you would expect me to say artificial intelligence. We have
Mhm.
a couple of companies in that area. We distinguish between companies that has developed AI tools,
Mhm.
like we have Embeddle, that is based in Gothenburg, a spin out of Chalmers, that is now having several customers. I think you have the Embeddle software now in the newest Volvo cars out on the road.
Okay.
It's really exciting. To speed up processes in the computers on the inside the vehicle. But then we also have companies who is using AI. They don't provide an AI product, but they are using AI within the
Mhm.
product to do different kind of analysis.
Okay.
And then we have also another exciting area that is quantum technology. That is
Okay.
not limited to only quantum computing, but the sort of quantum technology in the wider sense. And a lot of people may think that quantum computing is very, very far in the future, and it may be a little bit far in the future, but you still have several companies, also in Sweden, who make big money, significant revenue and good profit margins that provide uh, tools and auxiliary equipment to quantum technology, quantum computing companies. So there
Okay.
is a market there already that could be profitable already now.
All right. So semiconductors, quantum technologies, pharma, and AI.
Yes, yeah, that's some of them I would say. Yeah.
All right. Amazing. I think we are fast approaching the end of this very, very interesting. I just looked at the watch. The time has just whizzed past. But let's take one last question for our community because, of course, SweBAN works with business angel networks, and business angel networks are composed of angels, as you were explaining, STOAF structure as well. It's a meshed
Hmm.
structure. Um, What's your take on the Swedish angel investing landscape right now? Where do we stand? What's the kind of finger on the pulse? Is the needle moving towards more investments, more ambitious investments? Uh, what's your read?
I think there is a little bit of a trend that I've seen that it has been a little bit slowed down with the tougher economy over the last
Mm,
couple of years. I hope that will loosen up again soon. We saw
mhm.
a big sort of quite significant increase in the sort of before the pandemic and also during the pandemic. The when interest rates were very low, etc. So I think that the angel network, the angel network investment appetite followed quite closely the larger investment funds appetite,
Yeah.
up peaking and peaking in like 2022 or 23, and then it has been going more slowly after that. But we
Mm.
now see some trends and indications that it will pick up again. And you also saw that the valuations of the startup companies, they also peaked in during the pandemic, at the end of the pandemic. That is now gone down again.
True. Yeah. And now that you're discussing valuation, that's one of my favorite topics,
Mhm,
comes up
mhm,
in many forums. As somebody who has been in Silicon Valley itself,
mhm,
and you're now here involved and you have touched technology in several spaces, we, we typically get there's an assumption that Nordics or Sweden, for example, our valuations are typically much lower than our counterparts in US or Silicon Valley.
mhm, mhm.
Is that a fair assumption?
Yes, I think that's a fair assumption. I have one anecdote as an example. We have one of our investors based in Silicon Valley,
Mm.
living in Menlo Park. Now he is a former general partner of several Silicon Valley VC funds. He's also on our senior advisory board. I
Mm.
recall when we had one investment committee meeting. That's also one thing that we do. We invite all our limited partners to the investment committee meetings.
Okay.
The investment decision is taken by the investment committee, few members, but we invite all 110 limited partners to the investment committee meeting so they could sort of meet the company, they could get a feeling for them, and be close to the investments. And they're also allowed to ask questions. And
Mhm.
then we had, I recall we had one company that had a pre-money valuation at that point in time at 70 million Swedish krona. And that was so we presented that in that meeting, and then we have our senior
Mhm.
advisor based in Menlo Park. He actually we didn't say the currency, we only say the amount. We said, this company had a pre-money valuation of 70 million. Then he asked
Mhm.
Magnus, is this Swedish krona or is it US dollars?
Okay.
So there is quite a difference in valuation of
Mhm.
some of those companies.
And that absolutely came out in a very recent panel discussion as well, that difference of a factor of 1 to 10.
Mm-hmm.
So really interesting. Uh, One last exercise, because I think this has been a very educative talk for me and a very interesting talk for exciting talk for our community as well. And I was just trying to describe, like, create a values list of STOAF here. Like, can there be 3 words in which I can describe STOAF? But I'd like to hear from you, and then we'll kind of compare the notes. How would you describe STOAF in 3 words? Like, what 3 words would you choose?
Mm. I think if you would go out and ask the business angels who have invested in STOAF as a fund, I think they would say that the reasons they have invested is because we invest in complex technologies, and it's very difficult for a individual business angel to be an expert in all areas, and it's also extremely difficult to analyze the deep tech ventures without having the the skills and knowledge and experience in that area. So I think competence in the investment areas. Secondly, I think it's ticket size, because as an individual business angel, you are, or in many cases, you're too small to be invited to the interesting companies, because the companies, they would like to avoid a broken cap table, and they would like to avoid having small business owners putting in, a couple 100,000 Swedish krona each, because that will give them a long tail of small investors. So being able to join, jointly go together and invest. And then I also think for an individual business angel, if you have limited capital, it's very difficult to build a risk balanced portfolio. So for instance, if you're required to put in 200,000 or 300,000 per company, and you have 1 million to invest, you could have sort of maybe four companies in a portfolio. That is too few to have a risk balanced portfolio. Then you rather invest your 1 million into like STOAF, and then you get a portfolio of 20 companies instead with better risk balance. And then of course, then you have the co-investment price. You can pitch in additional money of the companies that you select.
Okay, amazing.
And then not at least also, I would say that if you ask them, they usually say that it's because of the great work that was conducted by the general partners in the previous 2 STOAF funds, like Lennart and Klaus and team.
Okay. Awesome. So I'm just kind of summarizing here. So competence in complex technologies, collaborative effect when you take the ticket sizes and kind of avoid the long tail of broken cap tables, and co-investment as well as portfolio building potential and the track record. I actually had 3 words which are quite close, but they were more like descriptive in terms of, I thought that emerging from this is STOAF is emerging as a very ambitious initiative, like ambitious because you're venturing into new technologies, taking risks, and shaping the future of Nordics in a way. Agile, I think that came out very strongly because whatever is happening, despite the complexity of the structure and the technologies involved, it's still agile. So I think that's a very strong core value. I think at the base of it, there is authenticity. So because authenticity reflects is in following up on investments and on the positive word that's developing. Magnus, thank you so much for a very, very engaging and involving talk, and for sharing your expertise, your experience, and telling us about STOAF and the great work that STOAF is doing in the ecosystem.
Thanks, Naimul. Thanks for having us.